In this video, we are going to discuss about the intraday stocks for 27th January 2022, and the day would be Thursday, which is also the monthly expiry of January. Now, January has been a volatile month so far. So let's start with Nifty. In yesterday's video, I clearly said that whatever the news is, this Omicron fear and all those things, and there was something uh, a war-like tension or a war between Russia and Ukraine, which I was unaware of. I didn't know, and I don't follow the news much. But in spite of everything, I said that whatever is the case, Nifty and Banknifty both wants to go up from here, and you can see that's what it happened. So let's start with Nifty 50. You can see that it opened lower, it came down near 16800 level, and from there it bounced and closed much higher. Even it crossed 17,000, 17,100, 17,150, 17,200, 17,250, everything, and closed near 17,277. There is a closing price, and this is a good bullish move in Nifty, which is likely to continue. And if it continues, and I also said that it is resting just on 61.8% retracement level. So by any chance, if it closes above this level, then we can see further levels like 17,600, 17,800, and even 18,000 level to come in the coming days. Okay, so now let's look it in 1 hour chart, and you can see that there was not much of a big green or big red move, but it was a slow and steady rise. Now this was the high and this was the low when it broke, and after that it firmly hold that level and traded well above it. So from here we can see the up move, and it can continue to 17,600 level. Now that may happen after the expiry. So in 15-minute candle you can see a long hammer which it broke out and made a retest at this level and then went up, consolidating, and then gave a breakout and sustained, making stairs at each level. So it was a slow and steady rise, which is quite sustainable move in the market, and it faced resistance around 17,300 level. This is the level 17,300 where it faced resistance and closed a little down. So what happens if tomorrow Nifty opens flat and starts going up? Then as soon as it crosses this high, or as soon as it crosses 17,300, we are going to buy Nifty, keeping a 25 to 30 point stop loss initially, and we will trail it as we go on, and our target should be 17,400, 17,500, all these levels. Now for intraday, 17,400 level. But now there is some uncertainty in global market, we can also see. Now if that uncertainty continues and if it opens with a gap down, then it will be volatile, and 17,350, 17,400, remember that we are looking for an expiry trade. So 17,350, 17,300, all this level will act as resistance on the upside, and on the downside 17,000 is going to act as support. So if it opens gap down and starts coming down, then 17,000 on the downside and 17,300 or 17,250 on the upside, this is going to act as the range in which we are going to look Nifty expire. But if it opens with a gap up, then this level of 17,250 is going to act as support, and 17,400 will act as a resistance. So we will see Nifty expire within this range. So these are the three cases that we need to know, and we can also do a straddle. We can sell a straddle and manage it as it moves whichever side. So that's what we can do with Nifty. And I also said that Bank Nifty is very much bullish, more than Nifty. And that's what you can see. Look at this candle. In yesterday's video, I clearly said that Bank Nifty is much bullish than Nifty. And this was the 50% Fibonacci retracement level from where it closed below 38.2, and if it closes it will likely to go to 39,000 somewhere near or after budget. So you can see this candle, it is made a very big engulfing bullish candle, mainly due to short covering, and then it closed well above 37,700. Now it was a little below 37,000, and today what a fantastic move it has given. So next target is clearly 38,500 level and 39,000 level. Now looking at 1 hour chart, you can see that it's a steady move. Here was some correction, but then it made a steady move, and it made some exhaustion in the last 15 minutes. So if it comes down, then we can see some sell off, and it can retest 37,200, 37,300, all these levels. But if it continues this up move, then we can see 38,000 immediately. So in 15-minute chart, you can see that it is highly volatile, but it was a directional. It went up, came a little bit down, then went up, came a little bit down, then went up, and in a staircase movement it is going up. So if this high is taken out, 37,800, so tomorrow as soon as 37,800 level is crossed, we are going to buy, keeping about 80 point stop loss, and our target would be 38,000. 38,000 will be our target. There is also a gap which needs to be filled. So that is the minimum target we are looking in Banknifty. But if it opens with a gap up, say near or above 38,000, then we can expect some volatile market between 38,200 and 37,500. This is the box in which Banknifty is likely to expire. 37,500 on the upside and 38,200 on the 37,500 on the downside and 38,200 on the upside. That's where Banknifty is most probably will expire if it opens gap up on 27th. And if it opens gap down below 37,600, then also there is some support at each level. So 37,000 has become a strong support which is unlikely to be broken. So 37,000 on the downside and 37,800 on the upside is where Banknifty is likely to expire if it opens with a big gap down. Now let's look at the stocks. The first stock is GAIL India. Now it was kind of a bullish move from here, from this level, then it went up, then came down a little bit, gave a breakout, and from there fell. Now if you ignore this candle, which is due to the yesterday's candle because of fear, then it is a lower high from where it can make it is a lower low from where it can make a lower high. So that is what you can see, that today's candle, it has engulfed the previous candle. So if you don't consider this candle, then the higher high has been established. If tomorrow GAIL crosses 145 on the upside, then we are going to buy, keeping a 2-point stop loss, and our target would be 4 to 5 point on the upside. The next stock is IndusInd Bank. From here you can see that it is clearly establishing a low, a double low, which is also higher. So now from here it fell. Now it can come a little bit down, but looking at the way it has traded, we can expect some further up move of 1 or 2 candle. So you can see previously we maybe have traded and marked this level for some reason. So these levels can come again. So if it crosses 887 tomorrow, then we are going to buy IndusInd Bank, keeping a 3 to 4 point stop loss, and our target would be 8-9 points on the upside. The next stock is ICICI Pru. Now you can see that from here around 650 level there was a sharp selling, and this low was taken down by a gap down, and from there it has made open equals to high candle and it has fallen. Then it tried to halt and then it broke this low also and closed well below the neckline. So if ICICI Pru trades below 552, then we are going to sell below 552, keeping a 4-point stop loss, and our target would be 8.7 to 8 point on the downside. The next stock is Indigo. You can see that this was a high, which was the higher high, and then this is the next high, which is a lower high. So lower high has been established and it has been highly volatile. It tried to go up, but if you consider it from this high, a lower high has been established. Now it can go for a lower low, or if you can consider that these levels 1920 levels can come at least, and you can also see that if you consider this, then the trend line is also broken and it closed well under. So if 1955 is taken down by Indigo on the downside, then we are going to sell Indigo below 1955, keeping 5-point stop loss, and our target would be 10 point on the downside. Or you can, after that you can trail your stop loss, and 1920 1930 level can come in Indigo if it falls smoothly. And a disclaimer that all these trades that I am discussing is only for educational purpose, and I am not a SEBI registered analyst, so I am not suggesting you to take the trade. You can consult your financial advisor before taking any trade. So I hope you enjoyed this video and thank you for watching.